In this presentation, we're going to record rental income. In other words, we're going to create a sales receipt. Within that sales receipt, we're going to create a new service item, that for rental income. We're also going to be creating a new income statement account, a new revenue account for the rental income. Let's get into it with Intuit's QuickBooks Online. Here we are in our Get Great Guitars file. We're now going to create a sales receipt for a sale, this sale for rental income. So we're imagining then that we're renting out our equipment and we're receiving revenue for the rental of the equipment. So this is going to be a new kind of income that we have for us. We've had the guitar service income or the guitar lesson service income, other types of service incomes, and the selling of the guitars. Now we're going to have the rental equipment. So therefore, we're going to go up top to the new button. We're going to go into the money in. We're going to be creating a make a sale. So make a sale. This will be pulling up the sales receipt. We're going to be putting this to a current customer. So a current customer is renting some of our equipment. We're going to call that music store stuff. It's going to be renting some of our music equipment, or music stuff store. It's going to be renting some. We're going to say the date is at the 2/29. And then I'm going to scroll down to the payment method. I'm just going to say check on the payment method, reference number for the check. Then we're going to go down to the product and service. We're going to add a new product and service, which I'm going to call rent music equipment. There we go. I think something like that. Then we're going to say tab, and we're going to be setting up this item. Now we're gonna call it a service item. We're not selling the inventory, so we're gonna call it a service item here. This is a rental process. So I'm gonna keep it at the rent music equipment. I'm gonna copy that. No SKU, no category, description is gonna be the same. And then the price, I'm gonna say is $500. Now note, when you think about the rental of music equipment, again, you kind of want to break it down. You probably want to break it down into what music equipment. If you're talking about renting the amps or something like that, then you can have a fixed rate for a particular piece of equipment. So in this case, you might imagine an invoice that has multiple pieces of equipment that has fixed rates on it and then hourly rates for those pieces of equipment. Or you might have some kind of package deal where you can say, hey, this is the amount of rental equipment for this one price, and you get these packaged things in them. You want to think about those types of things when you're thinking about how you're going to create the sales receipts and the invoices, because that makes it a lot easier to basically market those types of things, as well as making it easier to just simply bill for them in terms of the sales receipt and the invoice. We're just going to say 500 and be very general here with the music equipment. Now, we're also going to be setting it to another account over here, the income account. We have two accounts right now, one for our products that we sell and the other for the services. Now, you want to be careful on too many kind of different categorizations of income accounts, but if you have a major difference in terms of the type of income you have, then you want to have those, then you might want to have another different account on the income statement. Remember that there are various other reports, however, that can help you to break down your sales by service item or by item, for example. And so you can use those other reports too. So don't get carried away, in other words, with putting too many income accounts. Like, for example, you wouldn't want a different income account for every guitar lesson instructor that you had, possibly. If you break out guitar lesson income, maybe that would be another account you want here, but you probably wouldn't want every instructor broken out as a separate line item here. You'd go into more detailed reports for that. Okay, so I'm going to go down here. I'm going to say sales, and we can keep it at sales. After some deliberation there, I came up with equipment rental income. So that's the line item, and then I hit tab. So equipment rental income is what we've decided on here. And then I'm going to create a new income account. So it's going to be a new income account. And then the subcategory, I'm going to create the service or fee income. And then the name is going to be the equipment rental income. And no sub account. And we're going to say save and close. So there we have it. Is it taxable? No, because it's going to be service income. So I'm going to say non-taxable, no vendor. So I'm going to say that looks good. Let's save it, save and close here. So there it is in the description and the product. Then we're going to say the quantity that we have will be I'm going to put it at 9. So 9 times the rate of 500 is 4,500. What's this going to do when we record it? It's going to be increasing because it's a sales receipt. It's going to be increasing some type of cash account. In our case, that undeposited cash account. Then the other side is going to be going to sales or some type of revenue account. It's going to be going to a particular revenue account, which we set up along with this item, which is going to be that rental income revenue account. Let's save and close and check it out. So we're going to say save and close. Then I'm going to open up our reports. So we're going to go to our reports down below on the left-hand side. Let's open up the 3 reports since we're going to have a new account here. So we'll open up the balance sheet report. I'm going to change the dates up top. So we'll scroll back up top, change the dates from 01/01/20 to 12/31/20. We'll run that report. And then I'm going to duplicate the tab, right-clicking on the tab up top and duplicating it. Then I'm going to go to the tab to the left. Then I'm going to go down to the reports again on the left. We're going to be then opening up the P&L, profit and loss, or income statement. There it is. We're going to do the same process with this one. We're going to be adjusting the dates. So the dates, we're going to go to the dates and change that from 01/01/20 to 12/31/20. Run that report. Then I'm going to right click on the tab up top and duplicate the tab. Do this one more time with the trusty TB, trial balance. So we're going to go back in here. I like to search for that one. So we're going to search for the trial balance. It's not in my favorites yet. You would think it'd be in my favorites by this point. I feel like it's a favorite report at this time. Trial balance, and we're going to open that one up. And we'll change the dates up top there too from 01/01/20 to 12/31/20. We'll run that report. All right, let's first take a look at the balance sheet. Balance sheet, closing the hamburger, holding down control, scrolling up a bit to get to 125. Then we have the undeposited funds, which is increasing. There's the undeposited funds with the 4,500 within it. Scrolling down, we then see the music store stuff with the sales receipt that we have just entered for that 4,500. Scrolling back up to the top, we're then going to go to the other side, which is going to be on the income statement or profit and loss. Let's jump on over to it. Closing the hamburger. Then up top, notice we have the new income account. So the new income account at that 4,005. That's the difference that we want to see here. Now note, again, you don't want to get carried away with a new income account for every kind of new type of income that you have. And especially don't get carried away by breaking it out by customer or something like that, because you want to look at the other reports to do that. So these breaking it out, for example, we have sales, which is the service stuff. We may want to break it out for the major services. Like we could have another account here that was for the instructor sales or music instruction or something like that income. But we wouldn't want to put the particular instructors. And for this one, for example, we may want to break it out as is, might be appropriate here to break out the rental income as opposed to the other kind of incomes. However, we wouldn't want to be breaking out like the types of rental things that we rented, like an amp and a guitar and and other kind of things like that. So just be aware of that. Don't get carried away with the too many rental or the too many income items. Then, of course, if we went to the P&L, the trial balance, we could see this on one tab or one page. We can see the undeposited funds here and one tab and one page. And we can see on the bottom with the sales information where we have the equipment rental income there.